New York State can also audit sales tax, and technically, a lot of the times what happens with New York State sales tax is the tax authorities will look at a business's sales and see what their sales are and estimate how many products they sold and what the sales tax should be off based upon the amount of sales that they're reporting. If those numbers don't match up, that can trigger an audit. Anything can basically trigger a New York State audit. One of the big red flags are basically Schedule C filers, meaning self-employed individuals, and especially self-employed individuals who show negative income tends to trigger a lot of audits. If you're audited by New York State, what you should do right away is find a licensed representative to represent you in the audit. You don't ever want to represent yourself in an audit, and you typically do not want the individual who prepared the return representing you in the audit, especially if you have to argue different points. You don't want the person who prepared the return representing you in the audit. It's very hard for the accountant to argue certain defenses that may need to be argued. Since they're the ones that prepared the return, they really do not have a basis to argue any other points. With the New York State audit, you can get hit with several penalties, especially for underreporting income, and then you can get hit with penalties on the balance that is due as well. I've seen penalties that could be from $2,500 up to tens of thousands of dollars. It really all depends on income level, the balance owed, the level of the underreporting, and the amount of discrepancies that the auditor has found upon examination. When you hire a company like IRS Help, we've been in business doing this for over 42 years, and you can always come to our office and personally meet with us face to face.